will be recording this webinar today, or Zoom call today, and you have submitted a lot of questions, which we will either have the speakers cover during the course of the presentation, or which we will try to take afterwards. If we don't get to all the questions, we do plan to email a copy of both the recording and answers to follow-up questions after the webinar. So we hope that we will be able to get through everything this morning. We have a lot to cover and not very long to do it, but we're thrilled to see so many people on with us today. So I just need to make sure that Caitlin from DHS is on, which I'm not sure she is. So hold on just one second. So how about we do this? So again, I'm Rachel Flum, the Executive Director at the Economic Progress Institute. And as I said, we are going to be recording this webinar. You will all stay on mute for the entire course of the webinar. We will have the questions in the chat. So if you do not hear your question answered as the presenters are going on, please put it in the chat and we will try to get to all the questions during the course of this call. If we cannot get to your questions, we will have follow-up, both recording and follow-up answers to the extent that we can. So what I think, let's see. I think Caitlin is on. So let me just start with who is speaking today. So we're very pleased to have this be a joint call today with Caitlin Molino from DHS, Nora Crowley, who is with the Department of Labor and Training, and Jay O'Grady, who is with LISC Rhode Island. The purpose of this call is to help child care providers think through what their different options are for making sure that they can stay afloat and reopen when the time comes. So we hope that you find this useful. We know that there are lots of questions around this, and we won't be able to get to all of them today, but we hope that we can help cover some bases for issues that are commonly asked. So I think Caitlin is on, so I'm going to unmute you. Caitlin, are you unmuted?
Can you hear me?
Yes, excellent.
Wonderful.
So do you want to just do your quick presentation and then we'll move on?
Yep, absolutely.
Great, thanks.
So for most of the providers on the line, you've probably seen this roadshow, but I just want to give a little bit of context to the work that the Department of Human Services has been doing to support child care programs during the mandated closure period. I really want to thank Rachel Flum with Economic Progress Institute for coordinating this call with DLT. I know that a lot of our child care providers have reached out asking for guidance around unemployment insurance and the SBA loan opportunities. And so for us to have content experts from the Department of Labor and Training and LISC here to support those questions is just fantastic. I really want to thank all of my colleagues on the phone and on the Zoom line just for supporting our child care programs. You know, for the providers on the line, you know how important your work is to me. I recognize how valued and oftentimes underappreciated childcare can feel in the industry. And I just want you to know that while things are unprecedented and consistently changing, you are constantly on my mind. And the heart of the decisions that we are making at the Department of Services are to benefit childcare programs and providers. We first and foremost want to protect the health and safety of children served in childcare programs. But secondly, I want to support the economic viability of our childcare providers, recognizing that you all are critical to the reopening of the economy and that you deliver critical services to our families day to day. So again, just thank you. And I'm going to ask that we move to the next slide, which, you know, just really kind of, I want for families and providers to understand, the Department of Human Services took over the licensing unit in October of 2019, but historically, DHS has served as the lead agency for the Child Care Development Block Grant. And so part of that work is administering our child care assistance program, which supports low-income working families with a child care voucher to access quality care while they attend work, or a job training program. So our CCAP children by provider type, you will see that broadly we serve about close to 9,000 families weekly in child care assistance program. We have 766 providers that accept child care assistance families. That represents about 2/3 of licensed programs. And so when I talk about the policies that we've made at DHS to support CCAP providers, I am very much aware that for those of you who accept a large number of private pay families, you are not feeling the fiscal support that some of our CCAP providers are feeling during the mandated closure. And, you know, we are very much cognizant of that. Our first commitment at Department of Human Services is to continue funding our subsidized slots. But it is not without notice that there are a lot of families and a lot of providers that are feeling the impacts of COVID and are not able to access these CCAP funds during the mandated closure, which is why I'm really grateful for our colleagues on the line to talk about the SBA loan opportunities and other fiscal opportunities for viability for our programs upon reopening. The next slide, I want to talk a little bit about the decisions the department made during the mandated closure period for providers. Right now, I just want to, reiterate that as the lead agency, the money that we received through the Child Care Development Block Grant, we did receive an increase to support child care programs during the COVID-19 closure period. I want to make the commitment to all of you that every single dollar that we receive under this increase for federal funding will be going to programs. Every single dollar has either been contributed or allocated due to these payment practices under COVID, or to our costs for reopening and supporting providers around what the cost of reopening will look like. Almost immediately when we identified community transmission of COVID-19, we submitted state plan amendments to the federal government to relax or waive some of our payment practices to ensure that providers continued to receive CCAP payments based on enrollment and not attendance. That does have a cost. We see about 4% of children on our biweekly payroll marked absent. We are no longer withdrawing those from funding. So we are now honoring CCAP payments based on enrollment and not attendance, and have committed to doing so during the mandated closure period. That does hold a cost. And so we have allocated our CARES funding, which is our additional stimulus money through the federal government, to that cost. The other piece that is particularly expensive and valuable is we are waiving all family copays during the mandated closure period. This one supports families in not having to provide their contribution during the mandated closure period, but two, also ensures that providers are made whole during the CCAP or during the mandated closure period and are not being expected to, ask families to contribute that cost during the closure period. We're also waiving the allowable absence policy for CCAP providers. You know that typically families are allowed 5 days of allowable absence in a month. We are waiving that. So that is in line with our policy to pay based on enrollment and not attendance, and is consistent with what a lot of other states have done. We are one of 23 states. We are one of the first to have submitted these plan amendments for CCAP payment practices during the closure. There are now 23 other states that are doing this exact same work. And so I just also want to, reiterate, we know that this is not enough. This is something, this is a step, this is a phased-in approach to supporting our providers. We also, in thinking about how private pay families and private pay centers are impacted during the mandated closure, administered a survey to all of our licensed childcare providers on April 9th to really gather feedback on what additional needs providers have during this mandated closure period. We are evaluating a variety of options, and we'll kind of detail what those options will be moving forward, probably by Friday, around how we will resource programs to reopen and serve families once it's safe to do so. I know there have been a lot of questions about what reopening will consist of for programs, and so I encourage you all to trust the department right now that we are working through really thoughtful plans about what a reopening would look like for childcare. We are in daily conversation with public health experts and business owners to understand what the demand is and how we can safely and gradually reopen childcare in a way that is safe, thoughtful, and developmentally appropriate for children and families. So what we will be doing over the course of the next week is communicating with programs once we have finalized our plan for reopening. We do not have a timeline that has been finalized yet. That is something that we will work on through this week. We will be educating providers on if and when there are new regulations and what those would look like in adherence to social distancing guidelines and other CDC protocols and guidelines for health and safety cleaning. Our licensing unit will work individually with programs to submit plans to reopen based upon what your capacity is and your ability to meet those new regulations. We will have webinars available for providers to understand the new requirements and provide additional PDTA supports from the Center for Early Learning Professionals so that providers can understand the needs of how to reopen and how to do so safely for children and families. You have my commitment to understanding what the fiscal need is to reopen once it's safe to do so. I am hopeful that we will roll out a plan that will include some type of rate enhancement for CCAP providers upon reopening. The CARES funding from the federal stimulus, we have allocated and dedicated to subsidized slots. There are other states who have reimbursed private pay slots and are looking to do other models. Those other models often depend on philanthropic or for-profit investments. And so we are really looking at models in which we could leverage additional funding to support those other providers. Right now, we understand that what's going on with CCAP is, it is really challenging, but it's also raised to me an importance that you all, for those who are serving CCAP, you are doing such important work. For you all who are not serving CCAP, you are also doing really important work. And I want to figure out a solution for all of us so that we can all safely reopen and support families once it becomes time to do so. The next slide, we anticipated some questions regarding CCAP eligibility for families. I just want to clarify the eligibility criteria for CCAP. Families receive 12 months of continuous eligibility. There are circumstances which would exclude them from those 12 months of continuous eligibility, but broadly the federal requirement is that anyone who is given a CCAP subsidy is able to maintain that subsidy for 12 months. Even if a family reports job loss or temporary unemployment, they are then continued that 12 months of continuous eligibility and have the opportunity to receive an additional 3 months of job search. These rules and regulations were not changed during COVID-19. We are still mailing recertification packets to families because we know even if they report a temporary loss of employment, they will still be guaranteed coverage under the 12 months of continuous eligibility. We know that this is a challenging time for families, and so we've included a stuffer in all of the recertification packets. For those of you who are unfamiliar with the term stuffer, we frequently automate notices out of our integrated eligibility system to provide guidance to families. These notices can be confusing. Oftentimes we have to put them in multiple languages, which create multiple pages and can be very overwhelming for families. To mitigate this, we sometimes print what we call a stuffer, which is a notice that we write here at the Department of Human Services and manually stuff into envelopes to accompany notices. This stuffer has detailed guidance for providers for families about why they need to recertify, and if they recertify, that they will still be considered within that 12-month of continuous eligibility. I understand that providers are very uncomfortable and very uncertain about what reopening plans will look like. Please know that you will have time, you will have guidance, and you will have support from our department to operationalize an individualized plan for reopening. It'll be a plan that you're comfortable with, it'll be a plan that your families are comfortable with, and the department and the state of Rhode Island will not ask you to do anything that goes against public health guidelines and CDC requirements for safe distancing. I want to go to the last slide, which, for those of you who are familiar with our policies and procedures and our regulations, this is probably not news to you, but if you have any questions, please feel free to contact the Department of Human Services. You can either contact me directly, or if you have a licensing specific question, you can email our child care licensing unit. For CCAP questions, you can email our DHS child care email address. I just want to reiterate that for CCAP families, we are doing a lot right now to educate them about the importance of maintaining their benefits so that when child care reopens, they still have a subsidy to use. You know, if they don't recertify, which there are a percentage of families that do not recertify, that is typical for any public benefit program. They will be disenrolled. So I want to reiterate that as a provider, we are encouraging you to support families in recertifying, similar to how you've always done. It is really important to me that, particularly given the circumstances, we support families during this time to understand the importance of recertifying and making sure that they maintain their benefits so that when programs reopen, they can continue to receive the additional supports that they need.
Great, thank you, Caitlin. We do have some questions in the chat. We will try to get to all of them at the end, but one just quick question. Do you plan on having the webinars around reopening also available in Spanish?
So I think DLT has prepared a number of webinars for small business owners that would apply to Spanish childcare providers. The webinar that we do for reopening and the new regulations will be available in Spanish, as well as the health and safety training.
Yes, that's what it was.
So that, yep.
Okay, great. Thank you. And now we will turn it over to Nora Crowley from the Department of Labor and Training, who will go over the unemployment insurance program for folks. Thanks, Nora.
Great. Thanks, Rachel. And good morning, everyone. I probably am a less familiar voice and face and name for this crowd, but so if I haven't had a chance to cross paths with you, my name is Nora Crowley. In my normal kind of pre-COVID job, I am the executive director of the Governor's Workforce Board in Rhode Island. But like so many folks at DLT, have been reassigned temporarily to support, particularly with customer service and customer response for unemployment insurance and temporary disability insurance. Have learned a ton about this stuff, and I think we'll be able to answer most of your questions today. But if there's anything I don't have at my fingertips today, promise to come back and I'll make sure you have contact information to connect with me afterwards. But want to go through some of the basics of the income support programs that are administered by the Department of Labor and Training. So if we could jump in, Rachel, to the next. Do I have control of this or do you? Okay. So the first big piece, and I'll move fairly quickly because I think at this point in our response to the pandemic, folks have really interacted with these programs, so you may be aware of them. But just to provide some clarity, the primary income support program available to folks right now who have been laid off from their job, even if temporarily, or have had their hours reduced and they're at home and they are not earning an income, those folks are very likely eligible for unemployment insurance. We have an online application and we've asked everybody to indicate if their claim is a result of COVID-19. It's helping us expedite those claims and ensure that we're catching everybody and they're not caught up in some normal pieces of the unemployment insurance process. For example, COVID-related claims, we've waived the normal 7-day waiting period, so claimants will be paid for their first week when their claim takes effect, which is a temporary kind of waiver of the guidelines to allow for that. We've also lifted work search requirements for folks, at least for the time being, if they know that they expect to go back to the same employer once the stay-at-home order is lifted or restrictions are eased. And so there are some pieces that are not in place for COVID-related claims, so just on a flag that it's really crucial that if you or anyone that works for you or in your life is applying for unemployment insurance, they know to tell us and indicate that it's COVID-related. I will just add, and this is one of the questions that was sent in advance, that any income that is continued to be earned while receiving unemployment compensation needs to be reported. So if folks are working part-time or continuing to earn an income, we try to account for the totality of your wage when calculating your benefits, and then that's adjusted based on the income that's coming in right now. So just a flag on that, but if you continue to earn resources, if you continue to pick up hours or have some income coming in, that income would be reported and would just adjust your benefit rate each week. So we can go to the next one. The big piece that has come in response to coronavirus through the CARES Act is pandemic unemployment assistance, and this really drastically it expands eligibility for unemployment insurance compensation. And so PUA, Pandemic Unemployment Assistance, is a brand new program that we have launched just in the last 3 weeks. And it's primarily meant to capture folks who are otherwise ineligible for unemployment insurance. So folks who are self-employed or sole proprietors, folks that are small business owners, individuals who are independent contractors or gig economy workers. These are folks that are not usually eligible for unemployment insurance, but PUA captures them. Similarly, there's a whole group of folks that are determined to be ineligible for regular unemployment insurance because they're new to the workforce, they don't have enough qualifying wages, they may be part-time workers that don't typically earn enough, and those folks are being redirected into PUA where they're most likely going to be eligible. There's a separate application, so really just want to call attention to that. It's available on the DLT website, which is listed here. Similarly, we're asking everybody to indicate whether the claim is a result of COVID-19, which is really an expectation for pandemic unemployment assistance. But all the same kind of restrictions that would otherwise be on an unemployment claim are listed here in this case as well, the waiting period and the work search requirements. The one piece I would add, and this is becoming clear as we navigate kind of the population of individuals that are applying, pandemic unemployment assistance is designed to pick up folks who may be unable to work, but their place of business is still open for business. Individuals who are home taking care of their kids while childcare centers are closed and schools are closed, or folks who have been diagnosed with COVID or are seeking diagnosis. Those folks can apply for pandemic unemployment assistance, but they will be asked to demonstrate that they have good cause for leaving their job at the time. So it just slows down the process a little bit, but just wanted to flag it. They are likely eligible, but we are being asked to take a closer look and make sure that they have good reason to leave their job while their employer remains open. We can keep going. Okay, so this is a big question that comes up a lot. There's this additional $600 of pandemic unemployment compensation. The CARES Act carves out an additional $600 for every unemployment insurance claimant, regardless of their reason for applying for unemployment insurance. Does not need to be COVID related. If you are currently receiving an unemployment insurance benefit, you receive an extra $600 on top of your weekly regular benefit. That increase was effective the week ending April 4th, and it goes through the end of July. So every single week, as long as we are paying a claim, that $600 increase will be there. I just want to, clarify a couple of things that have come up as common questions here. If somebody is reporting wages that are over their weekly benefit amount, their normal weekly benefit amount, which let's say is $200 per week, they report wages in excess of that $200, we won't pay their weekly benefit, and they also lose the $600 that week. We're only able to pay the $600 when we're paying at least $1 on a claim. So that's been come up as a point of confusion for folks, so just wanted to clarify. And the other piece that often is asked recently, particularly if you're expecting when ultimately you reopen and are trying to bring your employees back, the $600 was intended to make most claimants whole on their normal weekly wages. Unemployment compensation typically gets you to about 45 to 50% of your normal weekly wages. The $600 boost was meant to get most folks to 100%. In some cases, they're actually right now making more on unemployment insurance than they might at their job. And I realize that puts employers in a tough spot. And so we do have a process to adjudicate and review any claims that for folks that are being recalled back to work. So if you're trying to and think or worried about how you're going to get folks back to work when we reopen, just know that there is an option for employers to refer claimants to us and their employees to us. We'll put a stop on the claim and review the circumstances. Again, if they have good cause for not returning to work, a diagnosis, childcare issues, or other reasons that they can't return, the claim would likely still be allowed. But if you are worried about how to get your folks back in, given the extra $600, we can provide and can send it around later on there's an email address that you can email our staff and they'll review the situation. Because this is going to be coming up. Lots of folks and we're going to talk about PPP loans later in the session today. Lots of folks are in a position where they need to bring back their folks onto payroll, and it's a little bit trickier because of the 600. We can keep going. I also want to just add, because these programs are not talked about as much right now, but they are still very much available. Temporary disability insurance and temporary caregiver insurance are available to Rhode Island workers. And, you know, if somebody has been, if somebody is sick or caring for somebody who's been diagnosed with COVID-19 or is being quarantined, they may still be eligible for temporary disability insurance or TCI. Those are also online applications at the DLT website. We are still asking folks to indicate if they're out of work because of COVID-19. And for one particular reason, if you've been directed to quarantine, we'll waive the medical documentation requirement for 14 days, which is the standard quarantine period. And so, you know, again, we're asking folks to tell us if it's COVID-19 related. I will just add that for TDI and TCI, many of the reasons that you might ordinarily apply for these two programs, those are now likely covered under unemployment insurance. And so if you're diagnosed with COVID-19, for example, or caring for a family member who has been, those folks are welcome to apply for TDI and TCI, but we'll just add that the $600 increase does not apply to these claims. They're only applicable to unemployment insurance claims. And so just wanted to clarify that unemployment insurance is still a viable option for folks who might otherwise consider TCI or TDI. Typically, these TDI and TCI offer a slightly better wage replacement rate than unemployment insurance, but under the circumstances right now, unemployment insurance is really kind of the best option for most claimants. Nonetheless, they're available. I wanted to make sure you knew. The last thing I'll just add on the income support programs is that we do have a program called WorkShare, which is in place to assist employers who are looking to hang on to their employees but need to reduce hours, either for their entire workforce or specific shifts or units. And they can reduce hours and keep them on payroll, and unemployment insurance will partially replace the wages lost. It gets most people to about 90% of their normal wage once unemployment insurance kicks in. You know, I would add that this program is manually processed. We've got really one person who manages the WorkShare program, and so it's a little bit of a slower process than our other programs. And so, you know, if WorkShare seems like something that you or someone you know might be interested in, just know that it's not as quick a turnaround. And so if you are urgently trying to figure out how to move employees to a reduced schedule, then standard unemployment insurance applications is probably the way to go, just for expediency. But nonetheless, this program is very much available for employers, and it's a favorite of a lot of employers because it allows, you know, it's less likely that they'll lose their employees in the long run because they're keeping folks engaged and on payroll. So then, you know, wanted to spend, I got there in the pre-questions, there were several about sick leave policies and paid sick leave. And so just wanted to flag that most workers in Rhode Island are eligible for sick and safe leave, paid or unpaid, depending on the size of the employer. We're starting to get a lot of questions about the expanded FMLA and paid sick leave under the Families First Coronavirus Response Act. And so we've included here a link to kind of the Department of Labor and Training in Rhode Island administers our Rhode Island's paid sick and safe leave. And so we've got a fact sheet on our website if you have questions about Rhode Island specific law and regulations around this. But if we go to the next slide, I just wanted to make sure everybody also had the contact information for the U.S. Department of Labor's Wage and Hour Division. These are the folks that are actually administering the Families First Coronavirus Response Act, which provides the expansion to FMLA and paid sick leave. Some of the questions that came in advance were really specifically about these provisions of offering paid sick leave to families who need to be home when schools are closed and childcare centers are closed. or to care for folks who have been diagnosed with COVID-19. Happy to talk through and take questions about this and direct people where possible, but I really want to be cautious about guiding you on making decisions for your employees or for yourself. And so wanted to provide, because we're not actually administering the provisions under FFCRA, and want to make sure that you're pointed to the folks who can get you really granular answers if you have questions about the provisions under that act. So what I've provided here is the local office of the Wage and Hour Division for USDOL, as well as their main line, just to make sure that you had that at your fingertips. And I think that's it from me.
Great. Thank you, Nora. Well, there are lots of questions, but we will continue on to the LISC section and then hopefully try to get back to some of the questions. So thank you very much for that overview. Let me just make sure. Let's see. We've got 3 Aaron Coxes, who are, one of whom is actually Jay O'Grady. So I'm going to unmute all of them.
Good morning. Can you hear me?
Good morning, Jay. Thank you for being on.
Great. Well, first of all, thanks for inviting us to participate. My name is Jay O'Grady. I'm a Senior Program Officer with Rhode Island LISC. And just in case folks on the call are not familiar with LISC, LISC is actually a shortening of our official name, which is the Local Initiative Support Corporation. And while LISC by itself doesn't tell you much about what we do, the full name actually tells you quite a bit about what we do. We are a nonprofit financing intermediary that is focused on supporting local initiatives in the communities that we are most particularly interested in, which is our low and moderate income communities, our urban core, and in particular in Rhode Island, we have a focus on the childcare sector, understanding and appreciating the great impact that you all play on providing opportunities for folks to really be the best that they can be from a very early age. Rhode Island LISC also administers the state's Child Care Facilities Fund, and many of you on this call are probably very familiar with Erin Cox and Megan Ressler, who are our 2 key administrators of that program, and you may have sought technical assistance from either of them over the years. I want to say that although Caitlin introduced us as being content experts, what we have learned over the last couple of weeks since this pandemic really took hold, and since the programs, the relief programs that we're about to talk about here have been rolled out, is that expertise is hard to find. If any of you were on the Commerce Corporation webinar last Friday, where the Commerce Secretary and the Rhode Island Administrator of the SBA were on, there are lots of unknowns about the programs that we're about to talk about. So LISC's goal has been to learn all we can about this, to solicit folks to give us a call so that we can walk through your particular experiences and situations on an individual basis. What we've learned is that no 2 situations seem to be the same, and we don't, as the previous speaker said, we don't want to put ourselves out there as being experts on something that is still a work in progress. So just that disclaimer before we get going. But we've been asked to speak today about some resources that have become available for childcare providers in response to the COVID-19 crisis. And these 3 programs in particular are the Paycheck Protection Program, otherwise known as PPP, the Economic Injury Disaster Loan, EIDL program, and the Express Bridge Loan Pilot Program. These are all out of the SBA, although some are administered. In particular, the first one are administered through private lenders. And so maybe we can advance to the next slide. On April 21st, as you see, Congress and the White House reached an agreement on the COVID-19 CARES Act, which provided $349 billion into the Paycheck protection program. This was signed into law on March. I'm sorry, on I think it was March 27th, actually, and not April 21st. But anyways, the highlights of this loan included, or the highlights of this program included. I'm sorry, I'm misreading the slide. Yes, so there was $349 billion initially allocated. That was exhausted, and then there was an additional allocation of $310 billion authorized on April 21st. Those funds were available to be tapped into as of this Monday morning, and folks that may have been shut out in the first round of lending, have now either gone back to lenders or somehow resubmitted their applications. There was $50 billion set aside for the Economic Injury Disaster Loan Program. That's administered directly through the SBA. And then $10 billion for EIDL grants. Again, we are attempting as an organization to aggregate as much information as we can and provide it to you in the most usable format. And so all resources and updated discussion of these resources are available on the Rhode Island Child Care Facilities Fund website. You see the link for that below. And we can move on to the next slide. So the Paycheck Protection Program is one that many of you may have already applied for. And again, if you were on the webinar that the Commerce Secretary had with the SBA Administrator and others last Friday, there are some wrinkles to this program as it goes, as it's been rolled out. But essentially, what this allows businesses to do is to apply for a potentially 100% forgivable loan that is equal to the size of their of 2.5 times their monthly payroll expenses. And the loan can be used for a set of activities, keeping in mind that the name of the program, Paycheck Protection Program, clues you in on what the goal of this program is. It is to preserve employment at your organization and to keep your employees paid. So the proceeds from the loan can be used for payroll costs for employers for employees, and that includes healthcare, it includes retirement costs, it includes anything that is directly related to keeping your employees employed. It allows you to pay, the proceeds can be used for rent. It can be used to make interest and principal payments on debt incurred prior to the COVID crisis. And it can be used for other operating expenses, whatever those may be. It can also be used for mortgage interest payments, but want to flag here that it is specific in the interim rules that were issued on April 2nd that the PPP loan proceeds cannot be used for mortgage prepayments or mortgage principal payments. So for whatever reason, the administrator and the Treasury Secretary have decided that mortgage interest payments are allowable under the PPP, but not mortgage principal payments. So we can advance. So if you are, if you take a PPP loan and your goal is to have it be 100% forgivable, you need to keep in mind that at least 75% of the loan proceeds that you take must be used on direct payroll costs. The other costs that were mentioned, rent, operating costs, mortgage interest payments, that can make up to 25% of the amount of the proceeds that you use, but 75% must be used on direct payroll costs in order to have your loan be 100% forgiven at the end of the day. Any borrowed amount that is not forgiven will be owed to your lender. And it is worth noting that even in the event that your your proceeds need to be repaid, the interest rate is pretty good. It's 1%, which I think is something that you're not going to find in any other small business loan from any lender. And the payments will be deferred for the first 8 weeks, and you wouldn't have to start paying back until week 9. And so if you would like to pursue a paycheck protection loan and have not yet done so, you will need to do so through a participating lender. And so, we've got on the 4th bullet point here, we have a link to the SBA website, which will help you find the nearest PPP participating lender. What we have recommended is that if you have an existing relationship with a bank, that you seek a PPP loan through that institution first. Some banks have set a cap on how much capital they will extend through the PPP program, and at least in the first phase, some lenders had run into that cap. But that's, we believe, where you should start first. Additionally, if you want to get a look at what the application process looks like, you will see an application form, a link to an application form in our first bullet point there. And essentially what the program requires you to do is to submit documents that verify what your payroll was as of, I believe it's February 15th. So there are certain payroll documentations, certain tax documentations that you will be asked to provide that will help your lender verify what in fact your payroll was, which will help them size your loan to that 2.5 times your average monthly payroll cost. And if you can we scroll down here a little bit? Yeah, thanks. So well, and before we leave that last slide, I just couldn't see the bottom of it. It's it'll take the lender some time to process this. They're that $349 billion that was initially approved went, as you all know, very quickly. There were a lot of applications received and a lot of processing that had to be done. So earlier the better. Certainly is our advice. All right, we can move on to the next one. So the Economic Injury Disaster Loan Program. Again, to keep referring back to the conference call or the webinar that the Commerce Secretary had last week, this program has been tough to figure out. What we have heard is that there were 700,000 applications for EIDL support filed in the first 14 days, and that it has overwhelmed the system. When I checked this morning before this webinar, the SBA website indicated that the EIDL program was closed and not accepting new applications at this point, and that is an indication to me that the additional funding that was approved last week has now been exhausted. This is a program that's directly administered through the SBA. It is, unlike the PPP, it is not a forgivable loan. If you are successful in receiving an EIDL loan, you will have to pay it back. However, there are pretty good interest rates, not as good as the interest rate that the PPP program has for monies that have to be paid back under that, but pretty good nonetheless. The loan repayment will be sized depending upon your individual business circumstances. Again, we've provided a link here that will allow you to find out more about the program directly from the SBA. I think when you click that link, it will tell you that the program is closed, but perhaps there'll be additional funding under later relief acts. So we can move along, I think. This is just a little more detail about that. There is an advanced portion of this which might be were the program open, were it accepting new applications, were new loans being granted. There is an advance option, which again would have to be repaid. But again, it's unclear, to the extent to which this program is still operating or has the funds to operate. I feel I would normally be self-conscious about, being so imprecise about this, but I think if you, again, were on the webinar last Friday and listened to the SBA administrator for Rhode Island attempting to explain the situation with this program, you would feel better for me. So we can go on to the next slide. And again, there's one more. This is the SBA Bridge Loan pilot program. Again, if you're a business that has an existing relationship with the SBA, have a COVID-related short-term crisis that might be bridged by this funding, there is the opportunity to reach out through the pilot loan program, again, directly administered by the SBA. Links to get to those programs are provided there. And again, our role at LISC is to attempt to provide folks in the childcare community the most updated information that we have, and to attempt to guide folks through the process of applying or availing themselves, or walking through a process of deciding whether or not the programs available are appropriate for your particular business. We've provided some links here, and have other links on our Rhode Island Child Care Facilities Fund website. We are also encouraging folks that want to talk more about these programs, or walk through scenarios that are specific to their business, to give us a call, to reach out directly to Erin, to Megan, or potentially to myself, to walk through, again, what your situation is, and how we might, best be able to help you, and how any of these programs might be appropriate for your particular situation. And I think that may be and yep. So I've already jumped ahead to this. So I think we can, wrap it up at that point.
Great. Thank you, Jay.
Thank you.
So thank you all very much. There were lots of good information. Just as a reminder for folks who jumped on late, we will be sending out a copy of the recording and the slides, and work with all of the folks on the call to answer any questions that we don't get to today. But let me just ask a couple of questions that have come up. First, for Caitlin, I'm going to unmute you. There's a question about that they understand there's not a time for reopening. Is there a new closing until date? This makes a difference for private pay programs in terms of when they can keep the non-refundable security deposit or return it to families. Can you answer that?
Yeah, we're still working through the finalization of a timeline. I think, every day the news around COVID changes. I would expect the governor to make an announcement related to childcare by the end of the week, which will give people really clear. Sorry, I don't have childcare, everyone. But it should give everyone really clear next steps on what the timeline is. And I just want to reference again, there will be an individual application process for programs that will apply to reopen under what will be new regulations. And so even if you don't feel comfortable with the new timeline, you can propose a plan to the department that will get you up and running.
Great.
And I see Jessica McLeod just commented, due to the state of emergency and the need for the governor to execute executive orders related to programming, there will not be a comment period for new regulations. These will be filed through emergency rule filing, which I think is pretty consistent with what other states are seeing.
Great. And then just briefly on recertification, the question is, we're seeing a number of children with an eligibility end date coinciding with a recert date. So like example, recertification date is 4/30. They now have an end date of 5/2. Is this an error? Will we be able to re-enroll those children in the portal if they are dropped from the system? That's
so we're offering a grace period for providers to, sorry, let me move to a different room. We are offering a grace period for programs to receive notice that a family has not recertified so that they can disenroll those families from the portal. So you may see a little bit of a time difference, but really families, and I had clarified this for Delari on the chat as well, families receive their recertification packets at least 3 months before their eligibility period ends. So, and they can reapply or recertify on the customer portal. A CCAP application does not require an in-person interview. If you have questions around a particular certificate and the family's eligibility, you can contact the DHS Child Care Office via email that was on that last slide I presented.
Okay, great. And just to follow up, Lori Wagner says we cannot access the enrollment tab on the CCAP website to delete enrollment. Is that something?
So you can disenroll. Because we're paying CCAP based on enrollment and not attendance, we froze the ability to add new enrollments because no one is actually serving kids right now. The functionality should work that you can disenroll a child. If you are having difficulty disenrolling a child, then you should contact the DHS Child Care Office line. No one should be able to enroll a child right now, but you should be able to disenroll.
Okay, great. Thank you. Moving on to questions for Nora for DLT. If I'm denied regular UI but may be eligible for PUA, is my claim processed under PUA automatically, or do I need to apply for PUA separately? How do I know?
Yeah, I saw that. Yeah, I saw that one. It's a great question. Folks do need to apply separately. They are, when they are told that they're ineligible for regular UI, they are given the link to apply for pandemic unemployment assistance. And I'll just add, in case you're sharing this with other folks, that we will ultimately be able to backdate their PUA claim to reflect when they were last employed. It is a manual process. We'll automatically make everyone effective the week they file, and then we will manually backdate them. So they would, even if they've lost some weeks there in terms of compensation right now, we will make it up to them and back pay it.
Okay, great. And is the $600 retroactive also?
It's retro to the week ending April 4th, so that's the week of March 29th or right about there. That is the earliest week we can pay the $600. So if your claim is effective that week, you would be back paid for that week, and of course going forward.
Okay. And then just a couple for Jay. Let's see. I want to make sure you're unmuted. So a couple people have asked, if we're receiving CCAP payments to support staff, we couldn't then pay them with a PPP loan. Is that correct? You know the answer?
So I can, Jay, do you want to take a stab, or do you want me to try?
Go for it, Erin.
Sure. So we don't see why not if CCAP payments are being used for other operational expenses. I think where the double dipping comes in is if you're using the payment and the CCAP payments for the same line item, but it's not super clear.
Okay. So what should people do if they're finding themselves in that situation?
I think that there are a number of tools that we can probably try to share that allow you to be tracking your expenses as you're getting PPP payments and as you're getting other payments, so that you're always allocating to one specific line item. So I think it's really just a due diligence aspect on the owner's part to make sure that they're spending accordingly.
Okay, great. Are there other... So I know we have heard from some family child care providers, because they don't register as business, they are finding that they can apply for the PPP loan. Do you have recommendations for them around what they should look at instead?
So just so I understand the question, the PPP program is available for 1099, sole proprietors, others that might not necessarily consider themselves to be a small business. So I don't know if they are, if they're making that assumption or if they have looked at the regs and decided that the regs don't apply to them.
Okay. All right. Yeah, you know what? You're right. I read it wrong. That was a question about the LISC grant. But so you're saying that for family child care providers who might not be eligible for the LISC grant because they have to be registered as a business, that they could still investigate applying for the PPP loan?
Yes, I believe that they could. And the PPP loan regs do, in fact, specifically allow for sole props and independent contractors to apply.
Okay, great. So we are just at time. So I'm going to say that I'm sorry we didn't get to all your questions, but we are planning to work with all the presenters on the call to find out the answers, and we will share both the recording, the questions, and the slides, and hopefully the answers in an email either later this week or next week. That will come from me at the Economic Progress Institute. And a big thank you again to all of our presenters. We really appreciate you taking the time to help demystify a lot of these programs for folks. And I do encourage everyone to watch the governor at her daily press briefing the rest of the week, because I think we will be hearing a lot about childcare in the next couple days. So thanks again, and hope to talk to you soon.